Hello traders, Gary Wagner here. It is 12:28 in Honolulu, 5:28 in New York on Monday, November the 7th, 2022, and this is the Daily Report for gold and silver. If not for dollar weakness, we would have seen gold close moderately lower today. We'll show you that on the Kitco Gold Index in a second. We're looking at gold futures basis, the most active December contract, currently fixed at $1,678.50. That's a net gain of $1.90 on the day, or 0.11%. The low today was $16.70 and the high $16.85. But as I said, it was the dollar that kept gold from really having a substantial decline. The dollar index was off almost 0.7%, 0.67%, and currently fixed at 110.035. Lastly, silver did have fractional or moderate gains today of about 8 cents, with December silver currently fixed at $20.86.5. This screen print was taken a couple of hours ago at 4:41 in New York, and at that time, spot gold was trading at $1,674.50, which is a net decline of $8.20 on the day. However, on closer inspection, you can see that trading actually took gold nearly $17 lower, $16.95, and dollar weakness made that decline a little bit more bearable, only declining by $8.20. Traders, on today's show, I want to take a long-term view of the market, specifically looking at March to present, and that, of course, is the moment in time when, one, gold hit its record high for the year, 2,077, and two, the first rate hike by the Federal Reserve. As you can see, I have highlighted a series of highs, and each of them have been lower highs, and you can see that as we go through. Every time the Federal Reserve continued to raise rates, we saw gold notch down to a new lower level. In fact, we have seen gold trade to 7 consecutive lower lows since hitting the apex back in March of this year. I've also illustrated how we have seen a series of lower lows, and that is beginning with this low right here that occurred in May of this year following the fall from March. This is the second lower low, the third lower low, but here's what I find most interesting. This last lower low is not just a lower low, because it's a series of almost equal lows. They came in after gold broke through a key and, I believe, critical area at $1,680. That is this line here. It has tested these lows of 1620, let's call it, just to round it down, on 3 separate occasions. And that is the first time we have seen this kind of a bottom form in the market. It tells me that traders are attempting to hold the line, so to speak, just above $1,600. The problem is that inflation remains entrenched not only in the United States, but through Europe, and it's a global phenomenon. On Thursday, the government will release the latest figures on October's CPI. But I've just put up on the screen a report that is produced by the Federal Bank of Cleveland. They call it Inflation Nowcasting. It comes out each day, so you can see that it was updated today, and it is predicting that the CPI for October will come in at 8.09%, and although we're just into November, they're saying that that stayed stable at 8.09%, with the core at 6.58%. The PCE still above 6%, which is 3 times the Federal Reserve's target rate of 2%, which means that while many investors, analysts, economists are hoping that after the December rate hike, we will see the Fed take a pause or maybe even begin to lower rates, as long as inflation is this hot, it seems highly unlikely that the Federal Reserve has any choice in the matter but to continue to raise rates and to do another thing, which we are learning about now, which is to decrease the money supply, tighten the money supply, which is another way of curbing inflation. Therefore, I'll be interested to see what the numbers actually show, but we are looking to get a very hot number for the CPI, with the core coming in just at about 6.5%, and the headline CPI, meaning when you add energy and food back into the equation, still over 8%, a 40-year high. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.